Let's bring in Kenny Polcari, our Thursday morning guy for the market. All right, Kenny, what's moving the market most right now? Is it the war or is it the Federal Reserve?
No, I actually think it's the overreaction from yesterday, right? I think it's the Federal Reserve. I mean, the war is the war. That's kind of settling in. We know that geopolitics does create some chaos. But what I think is happening today is the realization and the dissection and digestion of what Powell really is talking about. Look, he's basically admitted that they missed the boat, right? The boat sails. They are behind the eight ball, not in front of the eight ball, the way that he told the House yesterday. This morning, he admits that, that inflation is more of an issue than they thought, and that they now have to move aggressively. Something that we've all known and we've been having this conversation about, which was beyond me, that the Fed and Jay Powell 6-7 months ago were not on the same page. But they held rates at zero, and now he's got to play catch up because clearly the Fed is behind the action, not in front of it. I think that is the realization today.
A Fed member this morning said that high inflation is embedded in the economy, and that we will get 3.5% to 4% or even higher inflation even at the end of this year. That is very negative, Kenny.
It's very negative, but you and I have been talking about that. Look, PPI is the PPI is about to print with a 10 handle on it. So I don't know why anybody should be surprised. And now the Russia-Ukraine thing only adds additional pressure to the already built-in inflation. So this problem is bigger, I think, than than what he wanted to admit, but now he's forced to admit it. And his style yesterday about assuring everybody that in March it's going to be 25 basis points, but left the door wide open to 50 basis point moves, starting in the summer. So I think all that does is send a message saying, we got to move fast because we're behind the ball, not in front of it, contrary to what he led everyone to believe.
All right, 10% inflation. I think it's almost here, right in the immediate future. Sharply rising interest rates over the summer. Okay, that's a rotten situation for investors in the stock market. So what should I buy? What can I buy to get me out of this nasty trap here of rising inflation and interest rates?
It's a rotten situation in some sectors, right? Like tech, as you can see, and you said it now. Tech is getting smashed and will continue to get smashed if this story continues to heat up. But look, there is always, and you know me, I've been saying it all along, I'm now in that value sector for at least 2022, maybe into 2023. Consumer staples are names that I like. Financials are going to do well. Energy has done well. I own energy. I'm not chasing it up here, even though I still love energy. I'm keeping what I got, but I think it's a little extended and up 32% so far. We're only 2 months into the year. 2 months into the year, but consumer staples are still underperforming. Financials are underperforming, and that's where I'm putting money. In fact, I allocated more money to both those sectors, before I got in the show here.
Shall I sell my Microsoft? Last question.
Absolutely not. Don't sell your Microsoft, because I don't look at Microsoft as being, one of those high-tech growth, sexy names. I think Microsoft is a core holding. I own it. I'm not selling it. You got to keep it, and you've owned it for a while, so you don't want to, rock the horse.
Rock the horse. Okay. Yeah, I've owned it for 20 years, actually. A long time. Long time.
Do yourself a favor. Keep the Microsoft.
Kenny Polcari, thanks for being here. See you again soon.
Thanks.
Thanks, stuff.
Bye-bye.